Now, the conversation will focus on the future of fintech and credit direct beyond lending. That's the conversation. In no particular order, I'd like to invite on stage the Chief Risk Officer at Credit Direct Finance Company Limited, a position he has held for over a decade. With a career spanning 26 years, he has amassed extensive experience in risk management and financial services. In his role at Credit Direct, he has been instrumental in developing and implementing risk management frameworks that have contributed to the company's stability and growth. He's an alumnus of University of Ibadan, Cardiff Business School, and the Imperial College. Please make welcome on stage Gboyega Adelowore. A round of applause for him. Thank you. We also have a seasoned technology leader with 18 plus years of experience driving innovation and operational excellence in the financial services sector. His career spans across top-tier banks, fintech companies, and consulting firms. He has implemented, customized, and enhanced Finacle core banking applications for top African banks, including First Bank of Nigeria, United Bank, and Standard Bank. He's highly skilled in solution development, business process management, data analytics, and strategy formulation. He joined Credit Direct in 2021 as head of solution architecture, software engineering, ensuring that the company maintained its lead in the financial sector. Please make welcome Opeyemi Adejimi. A round of applause. Okay, your team members love you. That's good. That's a plus. Okay, great. My next panelist is a Nigerian entrepreneur, venture capitalist, and tech investor who is shaping Africa's startup ecosystem. He co-founded Blue Chip Technologies in 2008, a company that provides advanced data and analytic solutions for major financial institutions and telecom giants across Africa. In 2014, he expanded his impact by becoming an angel investor, backing high-potential startups that have redefined Africa's tech space. He's an alumnus of the University of Lagos and Aston University. He's a seasoned professional in data privacy, software licensing, and business intelligence. Please make welcome on stage Olumide Soyombo. A round of applause for him. Thank you. Our next panelist is the head of embedded finance at Credit Direct, where she drives seamless financial integration for businesses and customers. With a background spanning fintech, digital payments, and financial inclusion, she has led initiatives that simplify access to credit and unlock new growth opportunities. Her expertise in strategic partnerships, product innovation, and digital transformation has played a key role in expanding embedded finance solutions that enhance accessibility and efficiency. Please make welcome on stage Faith Ojeiku. A round of applause. Thank you. Our next panelist is the co-founder and CEO of Indecina, a leading AI infrastructure fintech. Renowned for her strategic prowess, she possesses a proven track record of instigating impactful change through the implementation of cutting-edge solutions. A distinguished graduate of the Kellogg School of Management, she earned her MBA with accolades, securing a spot on the Kellogg Dean's List and being honored with the Donald P. Jacobs International Scholarship. She has built a career leveraging technology to drive economic inclusion across multiple African regions. Please make welcome Yvonne Johnson. A round of applause for her. Last but certainly not the least, we have a seasoned AI expert and technology leader with a proven track record of building and delivering cutting-edge AI-driven solutions for both innovative startups and global corporations. With extensive experience in developing sophisticated large language model LLM-based applications, Gabor has successfully designed and shipped AI-powered platforms across insurtech, PropTech, and automotive sectors, significantly enhancing operational efficiency, data accuracy, and customer experience. His technical leadership has consistently translated advanced AI research into practical, scalable products deployed in production environments. Please make welcome on stage Gabor Barany. A round of applause. Thank you. He's joining virtually. And now there's one more seat. I'd like to introduce our moderator for this conversation. Our moderator is an exceptional compere, a talented and award-winning event host, traveled around the world. She's distinguished. She knows her onions. Please make welcome on stage, Mojibade Shosoya. That's me. I'm sure you're wondering, who's that? If I don't hype myself, who will? In this life, you must hype yourself. All right. Good afternoon, everyone joining us. And to Gabor, thank you so much for making time to join us, albeit virtually. So, just like I stated, our conversation is on Beyond Lending, the future of fintech and credit direct. And I'm going to give a quick overview of what we'll be discussing before we then start the conversation proper. It's also interesting for me because I started my career as a banker. I was a banker for a couple of years before I chose this path. However, I also then started as a credit risk manager. So I understand the evolution that has happened in credit processing in the financial system. So we then talk about how the lending industry is evolving rapidly, driven by fintech innovations that are redefining how credit is accessed. Looking at how I used to review credit applications with papers, as in bulk load of papers years ago. I mean, way over a decade ago. I'm not that old, but yeah, over a decade ago, we just review paper processes. However, we are now looking beyond lending to the future of fintech and credit direct. We'll explore the role of technology in shaping the next generation of financial services, as well as credit direct's approach to staying ahead in this fast-changing landscape. So I will just get started because this is a very robust conversation, and from the profile of all my speakers, you can tell that it's about to be a rich, rich conversation. So I'm going to start with Opeyemi, and my question to you, Opeyemi, is how is technology redefining financial services beyond lending? And the B part of that is, so the first part is how is technology redefining financial services beyond lending? Then the B part of that question is, what emerging trends will shape the next wave of fintech innovation?
Okay. Technology is an enabler. It supports the business to allow it to reach its optimal aspiration. What technology is doing for us at Credit Direct as a use case is it has shortened the curve of the customer journey. What would typically take longer time in terms of application, loan origination, that has significantly been shortened. One other thing it does for us beyond the significant reduction in the TAT, it has significantly reduced man hours. Typically, tasks that would take longer time to execute, processes that would take longer time to process cradle to grave had significantly been shortened. So in Howard, I would say technology gives you that superpower to do more with less. The B part where you spoke about
emerging trends.
Yes, emerging trend. So power of one, super app, it's something that has come to stay. You want to get your customers sticky. So what you then see that started like a few years back, but is really gaining momentum, is the embedded finance play. So there are lots of significant partnership in the industry. Banking as a platform, which has significantly grown from banking as a service, where you are able to offer much more for the customer. Neobank, contactless banking, a lot of people, particularly across generation, age group, you want to be able to offer seamless, personalized service to them. Leveraging AI and machine learning is also the future trend. The regulators are also ahead. So you want to have a lot of reg tech. You want to empower yourself in a lot of reg tech that allows you to stay above regulatory infractions. You want to monitor compliance real time. You want to be able to feed that and report that seamlessly to the regulator, or have a dashboard where you significantly catch that. Open API, because you just have to be thinking of interoperability, the ability to interoperate. Chuk spoke about our partnership here in Credit Direct. You want to build standardized services and API such that it's easily plug and play. Payment has also come to stay. Interborder payment, a lot of payment play. So these are some of the emerging trends that we will begin to see here and forward. And a lot of this technology we absorb well in Credit Direct, and we are also front runners in some of this technology.
Thank you so much. I love how you ended on that, very strong note, also telling us what Credit Direct is doing. Like, it's not new to us. We're used to it anyways. But that's really great. Thank you. Hi, Gabor. I want to be sure that you can hear me. Can you unmute to speak? Okay, I see that you're speaking to me, but I can't hear you. Okay, maybe we'll come back to you. I was going to throw my next question to you. I can see that you're talking, but we can't hear you. We'll fix that and come back to you. All right, so Faith, my question to you is, financial services become more integrated into everyday platforms, right? Now let's talk about embedded finance. What does true embedded finance look like beyond just payments? So when you talk about that and you provide a response to that, you can then go further to let me know how that embedded finance is reshaping access to financial solutions. So what does true embedded finance look like beyond just payments? Then how is it reshaping access to financial solutions?
Hello. So hi, when we talk about embedded finance, oftentimes we say we want to provide financial services where customers are transacting. When you look at true embedded finance beyond payment, and when we say payment, a lot of progress has even been experienced in payments. When you have the pay stacks, the Flutterwave of this world, they have scaled payments, embedded payments. But beyond payments, you want to see embedded finance scoping around savings or investment, as we call it, insurance, and of course, credits, which is basically the core of everything that's the core embedded finance that you want to really penetrate into the user journey. Now, for me, I would tell you that when you look at globally, when you see a partner like Shopify Capital, today the merchants offer payments, but at the same touch points, that merchant can just click on their dashboard and they get a loan. So true embedded finance is more of like an integrated suite of solutions. It's an ecosystem where you're serving the customer, you're serving the merchant, and all of them are having access to all the suite of financial services that you want to offer. And for me, I always say that that solution has to be intuitive, it has to be flexible, it has to be seamless, it has to feel as if the customer does not even feel like he's interacting with a financial service provider, but rather it just feels like another day transaction. So that is what true embedded finance is beyond what we currently do in terms of payments.
Thank you. And then so the second part is, how is it, reshaping, beg your pardon, access to financial solutions?
Hi. Okay, so how is it reshaping access to financial solutions? Today, a customer, because I like to work through the customer journey, a customer today wants to access a financial service, he has to walk into a bank, fill a form, try to get a loan, or try to get a product, or he wants to make a deposit. But with embedded finance, it means that that customer that walks to a POS merchant today can just, by constantly going to that POS merchant, because of their transaction history, can get a loan. That's how seamless embedded finance can be. So in a way, the people that naturally would not have any interaction with a commercial bank, for example, or with a financial service provider, but because you are bringing it to their touch points, they can definitely interact with your financial services. So I would say that embedded finance is definitely improving what we call serving the underserved and increasing financial inclusion for the ecosystem, especially for credits, right? From what we have done at Credit Direct, we've seen a lot of the customers that we're serving are first-time customers that are having access to credit. So it means that financial inclusion is a major play that we are actually impacting on for Credit Direct. So that's how we're doing it.
Thank you. Thank you so much. Very well said. Thank you. So I'm moving to Gboyega. My question to you is, fintech continually expands into new areas. We must talk about the risks involved. So what are the biggest risks to watch out for? And how can companies stay ahead of compliance and security challenges? Because these things will arise, right? As we are moving 2 steps forward, the other guys are also moving, trying to catch up. So how can companies stay ahead, especially in terms of security and compliance?
Yeah, thank you very much. So just from, the last statement you made, fintech, or technology rather, moves much quicker, naturally much quicker than regulation. So the first challenge you're going to have as you expand technology-wise is the regulatory uncertainty. For instance, for a long time now, there's been talk about having a fintech license in this climb, and it's been maybe 5 years they've been talking about that. Between that, you've had about 2-3 unicorns, and the regulators are still trying to figure out how to do that. Now, because of those uncertainties, the regulators will find, and it's a big risk because they'll find it hard to catch up and sometimes be forced to take knee-jerk approach because they do not sufficiently understand what exactly the fintech companies are trying to do. I think one way we've been able to get ahead of that in Credit Direct is by engaging early enough. And, I know people say there are lots of regulatory arbitrage, but there's also a lot of things that the regulation covers that you can leverage on, because regulation is good. It's just how to navigate it. And by engaging early enough and ensuring that you're on top of it, you can sort of minimize that risk. Another aspect, which is very big in the ecosystem, in the fintech ecosystem, is heightened third-party risk. Now, no single fintech can do everything in-house. It will cost a lot to deploy technology to build everything. You would have to probably, build different businesses to be able to. I'll give you an example. KYC verification is one area today that just because of a very simple technology, there's been some challenges in the industry, and that technology is SMS alerts. Very simple, right? But you can, we know how difficult it is to get those delivered. And I recall, I read of a company recently that even deployed the face match, and someone else was able to mimic that using AI, and they got, into. So you have that risk that, can I really count on this third party to deliver value to me? And some fintech companies offering these services can also struggle. So that then is an area of risk. You need to make sure, part of the way you mitigate that is get all the best service, use as many as possible, test them, continue to iterate, and ensure you walk around through innovation to mitigate that risk. You also need to make sure that from the onset you're getting your legal people involved. You also need to ensure that the companies you're partnering with are such companies that have enough credibility and good going concern, so that they don't just pack up because that your product depends on it. Thirdly is data security. Data security is a big thing. You need to build from the onset infrastructure that ensures that you have zero tolerance to, we call it zero trust, systems whereby you're ensuring that, you're mitigating that data security risk. You don't want a data leak, because once you have a data leak, it's breaking trust.
Thank you very much. I think due diligence is definitely a major factor. You on both sides, so for security and for compliance, you must do your due diligence. Thanks. Olumide, I'm now coming to you, and I'm going to be speaking to you from an investor standpoint.
Sure.
Why do you think that fintechs who move beyond lending are more attractive? And again, I'd like to do my double dose question. The second part of that will be that what are some long-term success factors? So how do they stay as a going concern, right? So the first part is, what do you think is the attraction with fintechs who move beyond lending? And secondly, what are some long-term success factors? Thank you.
Thank you. It feels like you're in another country and I'm here. Well, yeah, it seems like you're in the better part of that country. Quickly, I think if you look at what do fintechs do and why do they exist, right? I think that's the first question to ask. And I believe that the disruption that has happened in that space, or the innovation that has happened in that space, is taking some key functions that a financial institution will provide, unbundling it, and trying to do it better and conveniently. So for example, you talk about lending, you talk about savings. Those are key functions of a financial institution. So if fintech takes the savings problem, for example, how do I make it convenient? How do I make it easy? How do I make it fun? And we've seen fintechs build in that regard. But before they existed, you could go to a bank and save. You could set up a recurring debit on your account and save. Those things existed. But the fintech unbundled it and created what we call market-creating innovation to allow people who are typically non-consumers become consumers, right? In Nigeria and in investor space, we joke that every 10 naira in the customer's pocket, we are all competing for that 10 naira. You're competing with food, you're competing with sporty bet, you're competing with different things for that 10 naira. So how do you make non-consumers consumers? And then if you take lending, again, as an example, how do you take that core function of a financial institution, unbundle it, and make it easier and accessible? Again, you then make non-consumers consumers, and that's how markets grow. And that's what market creating innovation is. I would recommend the book Prosperity Paradox to everyone in the room. That is really the beauty of disruption and innovation. Even if you take lending or if you take payments, for example, how many people in this room developed a website that accepted payments before 2006? How many people? Show of hands. I'm seeing some OGs in the room, so I'm sure that there are a couple of people. Developed a website before 2016, rather, sorry, that accepted payments online. So that means nobody in this room walked through a process where they had to pay 150,000 naira to a company. I won't call their name. 1.5 at the point, imagine, and wait 2-3 weeks before you could get online. So today, when you tell someone that, oh, I'm developing a website and I'm online tomorrow, nobody here experienced that long wait. And then take lending with what Credit Direct is doing. There are many people here today that their first experience of getting a loan would not be walking into a bank, right? It would be through an online platform like Credit Direct to do it seamlessly. So sometimes you then think about what are we doing today that we're going to look back in 5 years' time and then say, oh, wow, this is how people used to do things. And that's what the investor outlook is like, right? You're taking a forward look to say, what is going to happen in this landscape? In 2050, Nigeria is about 400 million people, median age of 19. Those people are not going to walk into a financial institution to open a bank account and wait for you and go through your security gates and all that. Those guys are going to be digital first. They were born with the internet, and they'll be a digital first nation. And those are the opportunities that investors then look at in trying to make a business case for what is worth backing and what can give outsized return.
Thank you. Thank you so much, Olumide. So I'm going to try to ask Gabor a question. Let's hear you say hi to everyone in the room. Hi, Gabor. Hi. Okay, we're still having the same challenge, but we must have this conversation today. I still can't hear you. I can see your lovely smile. I can see that you're also speaking, but we can't hear you yet. I'm sure that will be sorted. Okay, try again. I think I just heard.
Do you hear me?
Oh, perfect. Hi, Gabor. We're
Lovely.
finally
Hi, everyone.
happy. Hi. Hi. Everyone is saying hi. Please give Gabor a round of applause. Thank you. I hope you can hear the applause.
I do, yes. Very
Okay,
kind
great.
indeed.
We're excited to have you on board. So we're going to be asking you from an ethics standpoint. And my question to you is, how can fintech companies ensure that their AI-driven solutions are not only effective, but also ethically responsible, especially when it comes to personal financial data? So we're looking at, security now, but ethics. How do we ensure that all these innovations, which are great, are not just effective, but also ethically responsible? Over to you, Gabor.
Thank you for the question. First of all, let me start by saying that I'm incredibly proud of the Clarabot team. I was fortunate enough to play a very small role in developing that product. And what I can tell you, we've worked very hard to bake ethics and fairness into the Clarabot product. But taking one step back, zooming out, what does ethics mean in AI products? Well, it means three things primarily: transparency, fairness, and giving user control over their data. Transparency means that as we deploy more and more intelligent and complex AI models, such as large language models, the ability for the models to explain why certain decisions were made and explain the reasoning behind a financial decision, like who gets credit and who doesn't, plays an ever increasingly and more important role. Also, it becomes a right for consumers. It's actually a right in GDPR already in Europe that if people get rejected through an AI-driven process, they can ask for a human review. And that takes me to the next point. As the stakes becomes higher and AI chips away and takes over more and more tasks from humans, it's absolutely crucial that we still have human in the loop who can review and supervise these algorithms. And in proportion to the impact of the decisions that AI has taken, we should all demand increasing level of human scrutiny. And my third point that I wanted to bring to the table here is something I really feel strongly about, is data sovereignty. I believe that simply if it's not your AI, if it's not your weights, it's not your brain, I envision a future where financial institutions, companies will host their own AIs, therefore not sharing hypercritical financial customer data with external third parties like OpenAI, but can self-host world-class open source models, therefore guaranteeing top-class, top-notch data privacy for customers and financial data. I think these are kind of the key pillars for building an ethical system that people and consumers can trust and will create incredible efficiencies we've never seen before in the history of humanity.
Thank you so much, Gabor. And I think, emphasis on transparency, I really like that you touched on that. Thank you so much. So, Ivan, I'm finally here. No, I made you because you're so close to me. I wanted to start from all those that were so far away. So, let's talk about money and technology, right? Money is evolving, and so are fintechs, right? But what are the biggest shifts happening right now in financial technology that people must pay attention to?
Thank you. It's a very big question.
So, and like you said, money is evolving, right? I mean, it certainly has shifted from kind of the paper money that we know, and now it's kind of, digitized, right? Whether it's in form of kind of, digital assets or the cryptocurrency, or even just, being able to kind of like use your mobile app to make kind of a payment, right? So in terms of kind of, big shifts and whatnot, and if we just kind of think about kind of our market, right, and, I like that Olumide started kind of in 2016, even though kind of fintech, has a history before that, right, and, the biggest thing at the time was just payments, right, rightfully so, right, because if you think about kind of, retail banking, payments is a big part of it. You always want to try to pay somebody, there's commerce, there's transfers and whatnot. And then after that, and then payment was also a big enabler, right, and then we saw with credit also being digitized. And the interesting thing about credit being digitized is that credit is a value chain, and technology kind of really helped with each step of the value chain, right? And it's hard to appreciate if you're not in the business how technology has really kind of revolutionized that. When we talk about kind of economic inclusion and financial inclusion, being able to leverage technology really expanded that, right? And so when I think about big shifts and whatnot, right? I always say that we are probably kind of more than a decade or two, right, into kind of digital transformation. And with that, there is a huge data exhaust, right? All of these transactions that we've digitized has spit out all this data. And so when we think about the big shifts and look, what's the next big thing? My answer is always, it's in the data that we already have. We look at the history of Credit Direct, very pioneering in terms of kind of consumer lending, right? But really started off on the public sector side and really grew that, to be a leader. And then, of course, had this audacious move into private sector. And so when you think about the data that they have, it's a massive advantage that no fintech that was born even kind of 5-10 years ago has, right? And I dare say no bank has, right? Because when you think about what they've done just on the consumer lending side. And so if you say that, look, what is the big shift that is going to happen? It's in Credit Direct databases, right? Because they have all this data and all these customers, both on the public sector side, both on the private sector side. And so they can tell who these customers are, what they're doing, when they do it, and actually what they're going to do, right? And so the short answer to the question is that it's in Credit Direct's databases, right? And it's now to apply the right algorithms and the right tools to be able to figure out what those next shifts are and then be ahead of them.
Okay, please give a round of applause. It almost seems like Credit Direct is the blueprint. Thank you. So Gboyega, I'm going to ask a final set of questions before I take my parting shot from my panelists, right? But I'll start with Gboyega this time. Everything is evolving, even fintechs, right? So you see that more fintechs are offering alternative credit solutions. How can companies build trust whilst ensuring responsible lending and financial sustainability? So we're talking about building of trust here whilst you're, lending responsibly and also trying to build financial sustainability.
Yeah, okay, thank you for that. Trust comes with transparency. You need to build a system, a solution, a business that is transparent, especially when it comes to credit. No hidden charges. People know, just like the example Gabor gave, if you're declined, using an AI, if you use an AI for the sort of credit models we're building these days, and you get declined, why was I declined? All those add to the transparency, and then that would then build trust. I think you can remain responsible by building that trust and ensuring that your system is transparent enough.
Okay, thank you. So again, we mentioned transparency. Opeyemi, I'm coming to you now, and my question is around automation and AI. Automation and AI, we all know, are transforming financial services. Now, my question is, how do we ensure that these technologies enhance user experience rather than create barriers? Because what we want is to make the customers more relaxed and make sure the transactions are seamless. So how do we ensure that the technologies we're deploying are creating, convenience for these customers rather than creating barriers? And what role, you can tell us now, what role Credit Direct is playing regarding this?
Okay, just as Gabor mentioned, responsible AI implementation is something that is very strong and paramount. Personalized services. Now I'm shifting to using Credit Direct as a use case. We try to make life extremely very easy for our customers across our product offerings or suggestive offerings. Yvonne spoke about how data is one of our strongest strengths. Leveraging AI, data insights, and a lot of ML models. I know where my customer, I know the exact services that I can recommend for you. So it kind of shortens your checkout time. It shortens the time you need to do business with me. I'm giving you just the right size of products that I think you need. And beyond personalization, borderless and timeless service and experience, today you can reach us through Clara, irrespective of the timing, irrespective of the services you want. There's a bot that's specifically been built to model the kind of experience we want you to have. So we have leveraged technology to really give our clients peace of mind.
Okay, peace of mind. Thank you so much, Credit Direct. Now I'm going to ask Faith now. My final question to you before I take your parting shot is, what are the biggest operational challenges when embedding financial services into non-traditional platforms? And how do you ensure scalability whilst maintaining trust and compliance? And, emphasis again on trust and compliance. So again, my question is 2 in 1. What are the biggest operational challenges when you're embedding financial services into non-traditional platforms? And then how do we ensure that we're scaling, but yet maintaining trust and compliance with regulators, of course?
Oh, thank you. I think I want to go the real life experience that I have today. And I would say that one of the biggest challenge that we have is alignment. I'll just put that in quotes, alignment. So you look at the non-financial platforms and our financial platform, we have different objectives, right? An example is the financial service company is trying to get what's the right data to score a customer, to make sure that I'm giving the customer the right products, and of course, there's return of value. And then you look at maybe a non-financial platform, like let's give an example, the airline space, right? What are they thinking about? Oh, I want my customer to go onto my platform, log in there, buy a ticket in record time and check out, right? I was doing an engagement with an e-commerce platform, and one of the things they asked for was, I want 2 minutes checkout. I don't know what you're going to do, but it's a 2 minutes checkout that I want. So going back to the word alignment, where most times these 2 different industries have different objectives. So that is a major challenge that we're trying to solve, where we kind of come into the middle and we engage our partners to understand the need for getting the right information that can help us score our customers better. Another thing, of course, when you tie the alignment to is data, right? Non-financial platforms, unlike us, where we would go on doing the KYC with the CBN regulations and everything that we do not do most of that, right? So the data they are collecting is not as robust as we need them to. And of course, unlike financial services platform where we're collecting data, we're checking this data against some KYC platforms, that is not being done today. So that's the major challenge. And the last one I would speak to maybe infrastructure, right? Doing a lot of integrations with these platforms have really shown the gap in infrastructure, which we really must solve. If I have to say what is the way forward, I would say that we need non-traditional platforms, especially our merchants, to start looking at KYC from a different lens, right? Because if we're able to have platforms that are non-financial, do the KYC of customers, collect the right data, it means that we're able to really partner better to serve those customers with the right product. That's a major thing that we need to solve for. And I think that we also have to look at the issue of trust is majorly tied to communication, right? Transparency, as Gboyega has said, communicating with our customers, we really need to be very clear on that. And we must understand that trust is a journey. It's not something that you just get into trust with providing the right products. It's going to be a long-term play for us to do. So we must look at trust from that perspective. And finally, I'll just say that whatever products that we're building, right, we must localize it to our markets. It's very easy to talk about embedded finance. It's very easy to talk about checkout from the lens of global view. But everything that we're doing, especially in Credit Direct, is looking at our local market and really tailoring those products to serve this market. Thank you.
Thank you so much. Thank you. So, Olumide, I'm going to ask you a question and also have you give your parting shot because we're almost out of time, if not out of time. So, we're going to talk about collaborations, right? So, my question is, how do you think startups can collaborate with established players like Credit Direct, for example? And then we'll take your parting shot on the subject matter for this panel conversation.
Okay, sure. You know, when I hear things like, oh, the fintechs will eat the banks, and those big, bold statements, I laugh because many times the collaboration is deeper than people think. A CEO of a bank used to tell me, hey, Olumide, I wear two hats, one with blue chip and then obviously one as an investor. So Olumide, blue chip works with us as the traditional financial institutions and we pay you. And then you take that money to fund startups that want to disrupt me. But then the role people like us play in that market is to serve as that bridge. There's a lot of mistrust, I think we talked about trust earlier, between the startup ecosystem and the traditional enterprise players. Oh, I'm taking this idea somewhere, they'll steal it and they'll do it themselves. Sadly, we've seen some of that happen. So somebody needs to be in the room that understands and speaks the language of both worlds to bridge that gap. But I think it was Bill Gates that said there's been nowhere a mobile money operator had come into place and the banks died. They collaborate and even increase their market share. So I think the spirit is partnership. We live in a low trust society, but I think over time that started to change. And you're seeing many of the leading fintechs, many of the leading banks starting to collaborate more. So you can only get better from there. Regards my pattern shot, for me it would be, I'm very bullish Nigeria, I'm very bullish Africa, and it's based on, I think I alluded to some of the key indices that we see and the bet that we are making. I saw a gentleman come up on stage to speak, and I think it was a data scientist that introduced Clara. And I thought to myself, this dude must have been born with the internet, right? He was born, as he was born, he had a tablet, I'm sure, because probably maybe 22, 23. So he was born with the internet. His MD probably didn't use the internet till the first time he was 12. I mean, chooks. What time did he use the internet for the first time?
We'll make him answer that when he comes
Maybe
back.
15, if he was lucky. But it tells you the kind of digital revolution that we would see and the digital first nature of the kind of institutions that will be built, the kind of data they will generate, and the kind of entrepreneurs that will be needed to solve that problem. And I think those entrepreneurs are in that room. So I'm very bullish Africa and bullish Nigeria. Thank you.
Thank you so much, Olumide. As we start to wind this up, I will ask Gabor one final question and take your parting shot in a few seconds. So my final question to you, Gabor, let me just be sure that we can hear you. Can you please unmute?
Yeah, do you hear me?
Okay, loud and clear. How can fintech infrastructure evolve to seamlessly integrate financial services into everyday digital experiences whilst making sure that there is no disruption on control from the users? That's my question to you. I'll take it again. How can fintech infrastructure evolve to seamlessly integrate financial services into their everyday digital experiences without disrupting user control? And then I'll take your parting shots in a few seconds. Thank you.
Yeah, thank you so much. Fantastic.
Okay, so
to
just
highlight that the name of the game is really minimizing friction while maximizing.
Or
embedded natural.
Hi, Gabor. I'm going to pause you for a second and ask you to just take your answer again because we've lost the audio. So confirm that the audio is back, and then we'll have you retake your question very quickly. All right, Gabor, let's go from the start. Thank you. Apologies for interrupting you. Okay, we can't hear you. Well, Sufik, we apologize for that. I will come back to you to take your pattern shot. But let me just close out with my final question with my physical panelist. So, Yvonne, my final question to you while I take your pattern shot also is, not everyone has access to the financial tools that they need currently. What are the most practical ways that fintechs can help more people take control of their finances? Then I'll take your pattern shot in a few seconds. Thank you.
Thank you. It's a very good question. And I think that, when we talk about kind of financial inclusion, economic inclusion, which I think is even more important, some of these things about helping people to kind of manage their finances, take control of their finances, is very helpful, right? And I'll give an example. I used to work for a bank, right? It's an old generation bank that had a huge advantage in terms of its savings deposits, right? I was in the strategy department, and I never had to worry about whether that savings portfolio was ever going to dip. We were the market leader by a mile, right? And then, fast forward, we have seen what fintechs like kind of Piggyvest and Carrywise have done, right? Nobody would have ever thought that, that generation of customers would care about kind of savings and investments, right? And that's a perfect example about how, just having to create that demand for taking control of my finances, saving for rent, saving for this, saving for that, right? And today we're seeing some of kind of the more quote unquote traditional, companies now try to catch up in terms of, savings and whatnot, right? And I think it's a perfect example, as I even just talk about my part in short about, thinking about our market, empowering the customers, right? I still think we're scratching the surface when we think about retail banking, really about the individual, about the customer, the consumer and what they want, right? And I will go back to kind of a theme that's recurring. It's all in the data, right? You look at the data, you see people start to save for rent at a particular time of the year, and we know why, right? Because they have to pay 1 or 2 years up front, right? When that is happening, you see that in the data, and you can be proactive about, what, let me help you with that, right? We see in the data that somebody is an income earner, a salary earner. We know when that income comes. We know we know at what frequency. We know the amount, and helping the customer to say, hey, look, I can automatically save 10% of this, for you, right? So again, when you think about, it's just really a mixture of these powerful tools that we now have. And like Faith said, just really trying to localize it and just really thinking about the customer in mind. How can I really help them to manage their finances better? And of course, ensure that, whether it's in terms of kind of economic inclusion and wealth building, that they're doing that.
Okay, thank you so much. Thank you. And finally, back to Gabor. Gabor, hi, please let me be sure that we can hear you.
Hear me?
Yes, perfect. Thank you. So back to the question, I'll just take it again. How can fintech infrastructure evolve to seamlessly integrate financial services into everyday digital experience without disrupting user control? And then your parting shot. Thank you.
Yeah, absolutely. Thank you. So the name of the game is really to minimize friction while maximizing transparency and user control. In my view, financial services are best when they become nearly invisible and blend into the life of the user and becomes just a natural part of the app and the platform that they already use and trust. But by removing friction, it by no means removing control. Actually, users have to understand clearly what they give their consent to, what sort of financial transactions occur, and what sort of decisions are taken. And that has to be clearly and transparently communicated. So in my view, integration altogether becomes safer and more trusted through the deployment of modular financial stacks. I think some of the other panelists have already mentioned open banking APIs, mentioned KYC services, banking as a service. So actually customers get accustomed to using these experiences and therefore creating a flywheel of trust where people just come into the habit of using these services and making them part of their daily lives, not even thinking about it. My parting shot would be is that I am convinced that what we see happening right now since the ChatGPT moment 2 years ago is nothing like business as usual. This technology is going to be bigger than the internet. It's going to be bigger than the mobile, and it's fundamentally going to change not just the fintech or financial industry, but people's lives. So earlier, we lean into these new technologies, which Credit Direct is really at the forefront of. The more benefits, the more amazing experiences, and the more efficiencies we can reap. So in my view, this is probably the best time to be alive. AI is here, the ChatGPT moment is here, and AI agents and large language models are here to create the next wave of prosperity.
Thank you so much, Gabor. Ladies and gentlemen, on that note, we have come to the end of this panel. It has been truly informative and insightful. Please give a round of applause to my exceptional, brilliant panelists. Thank you. And for the moderator, a round of applause. Thank you. All right, we'll take a group picture very quickly. Gabor, we would ask Clara to add you to the picture when we're done, just because you're not here. But we thank you for, let's step forward a bit. We thank you for joining us virtually. Thank you for your contribution as well.
Thank you all.